All right, let's jump into some new trades for the week. I'm going to outline 3 different trades here today. One will be on Micron, one's going to be on the Aussie dollar futures, and one's going to be on corn futures. So we're going to jump into those 3 new trades for the week this week. Before we do that, let's just jump quickly into the market here. Take a look at where we are. ES futures up today a little bit, over 0.15% or so today. You can see here on the weekly, we've been rolling up, getting into this ascending triangle piece here. We're right at this supply area and seem to be breaking through a bit. But if you take a look at the underlying down here, you've got the stochastic momentum. It is oversold, but it can stay there like it did back here for a month or two, so it can stay up there. You got the TTM squeeze in a squeeze, but the momentum starting to fall out, and MACD is also showing momentum slowing. Even though we're breaking through here today, we had a little bit of a pop and then a drop this morning when the false accusations of a explosion at the Pentagon came out. But here on the daily, you can see we're breaking through this supply zone here. So can we run higher? We absolutely can. So we are overbought on the daily and the weekly, but you got some good momentum going here. You got a squeeze breakout going, so we can keep moving a bit higher on ES. If we take a quick look at the Russell, same thing. We are in a downtrend overall here on the Russell, but on the daily, you've got decent momentum heading up. You're in a squeeze, getting ready to fire on the squeeze as well. So solid on the Russell breaking through. You've got this overhead of the 200 EMA come into play in about 30, 40 more points from here. But Russell, breaking through, coming back down, testing the 20 EMA, and then bouncing off of that and breaking this downtrend. So Russell just meandering here, getting tighter and tighter and tighter. But I think it'll resolve to the upside. And if you look at the the weekly here, you were oversold, and you're definitely coming out of that a bit here. So those are lined up. And then quickly looking at the NASDAQ as well, tech stocks just continuing to run. They are getting extremely oversold. But again, back here in July, we stayed oversold for almost a month and a half or more before and even past that, we came back down, ran up a little bit more. So you could be here for a couple months. We'll see what happens. We've had a pretty good rally off of these lows from the end of December. So pretty good uptrend for the year here. And the NASDAQ, if we're taking a look at, again, at this weekly and daily, we are overbought pretty well on both of these. And we're getting pretty far from this 8 and the 50 EMA. So we're getting farther and farther away. I'm thinking as we start to come down here at all, if we do down to this 13,600-700 level, we'll potentially look for a PSR reversal here. Squeeze could be getting longer in a couple days. So NASDAQ could get a little pullback. Doesn't mean it's crashing. It just means a pullback could be coming as we look at that. Let's take a quick look at a few indexes as well. XLK here, where Microsoft and Apple are the main holdings here in the XLK. Again, very overbought on the weekly and the dailies here, getting long in the squeeze, similar to the NASDAQ is where we're seeing these. I just think we're getting farther and farther away. It's going to have to take a break at some point on the XLK, but that's definitely driving the market. On the XLY, this is your Amazon, Tesla, and you got a little McDonald's and Home Depot in there. This is also getting a bit overextended, not to the extent that the XLK is, but XLY getting a little overextended, potentially looking at a PSR reversal on the weekly. We'll see where we go here. I think it's just getting, again, far from these moving averages, and I think you're going to have to come back and retest this 21 EMA on the XLC or XLY. And then if we look at the communications group, the XLC, where Meta and Google are your primary two, you are again very overbought, and both the squeeze has fired on the daily here, getting farther from your MAs. But you get your your breakout here going. So we're solid right now on the XLC. We'll see what happens. XLF starting to repair itself a bit. Looks like it's reversed well off of the weekly here, and then on the daily here, you've been climbing quite a bit. So XLF continues to recover. It could be ready. It's hitting a squeeze here. It could be ready to get a little pop up to that 34 level. So keep an eye on XLF. If XLF really gets going and XLK and XLY and XLC continue to stay solid, could be a pretty solid rally coming our way. And if we look at the last major sector here on the XLE, on the weekly here, it's weak. You've got everything moving down, and momentum-wise, you're in a PSAR bearish mode. You're below your major moving averages. But on the daily here, you've made a little bit of a bottom back in here, reversing on the squeeze, MACD reversing, stochastic momentum heading higher. So you're getting a little bit of a breadth move here with energy popping or moving up a bit, financials moving up a bit and joining those other areas. And we'll take a quick look at two of the main futures, and then we're going to jump into a futures trade. On oil here, just been in this downtrend dating back to June or so of last year. Really, you could go all the way back here to March of last year, and you're in this pretty solid downtrend on oil as you've dropped from a high of around 130, 120 in here, and then just getting stuck in the 70s in here. I think it's weak on the weekly here, but on the daily, you've got some good momentum reversals off of these lows. I think we're just going to move sideways and hang in here for a bit. So primarily ripe for strangles there. And then gold, you've had the momentum coming out of this on the last several weeks. We've been dropping 3 weeks in a row. You can see here on this drop, you got momentum to the downside, but you are over, in my opinion, you are oversold on gold here. And even though you're still heading down on the weekly, you could get some bottoming action in here around this 1960 mark here. We'll see if it holds the 50 exponential moving average here and can hang in there. MACD is reversing a bit. Squeeze is not, and stochastic momentum is oversold. So not a bad spot in here for gold. I'm not getting super bullish, but a great spot for a 1-1-2 trade. So let's look into our trades for the week. And the first one's going to be on Micron. So let's take a quick look at Micron, see where we are. We're going to put on a put fly in Micron. And let me give you a reason or two for this. Number one is on this news here, China banning Micron. So you got a little bit of the trade war heating up here. China banning Micron. So you got Micron selling off. Here, we'll take a quick look at the chart on Micron. Let's look at the weekly daily chart here. Been in a really solid uptrend on the weekly, breaking out of this resistance level here until today. But you're getting a bit oversold. Even though you broke out, we're going to come back down, test it. Can Micron continue to pile higher? Maybe. Look at, is this China news really going to impact it severely? We'll see how that happens. But MACD might be starting to roll over today. Stochastic momentum overbought and tipping over. Even though the squeeze is firing here, I think you could see Micron pull back, I think, into the probably the mid to low 60s. Maybe come back down and hit this 21 because, again, it was been overextended. So you got a bullish, or I'm sorry, a bearish catalyst with that China news on Micron. So we are going to go with a put fly. We're going to center it right at 60, which is the expected move out about 25 days or so. From here, we'll go with a 5 wide, and we're just going to see if we can head towards this tent. We'll pick up 50 to 100% maybe on this particular trade. We're not going to go for the full home run on it. And then if this chart really doesn't head lower, if we bounce right off of this level here around 65 and head higher, then we'll look to get out. If not, we're going to look to see if we can get closer to that 60 range in here. If we can break 65 and head into this area here. So we're going to go with the put fly since we are very low risk, high reward on this thing. For every contract, you're risking basically $100 to make 400. We're only going to be shooting for somewhere around $50 to $100 per contract winner on this trade. Next trade is going to be a strangle on the Aussie dollar futures. We're going to put this on roughly around the 595, 730, taking in around 0.0019 on this. Obviously a high multiplier on the 6A. When you look at it on the chart, and we have one on that's about to expire now, you've been in this really tight weekly trading range for really a couple months now, and we're getting to the lower end of that range. So we'll see how that transpires here, but it's just been bouncing back and forth on this. With the dollar gaining some strength, you've seen then the weakness in the Aussie dollar, which you would expect here. So as it heads a little bit lower, but I think you're finding some support areas in here. We'll see, but we're going to put a strangle on. So on this strangle, we can sit in here, and we've got good downside space on this particular one. It's a 38% initial return on margin because, again, you're trading futures, gets such great, but we're only looking for a 50% winner or a 2x loser on this one per contract. Right now, you're getting about $190 per contract max profit if it stays in the tent. All right, and then let's go to the third trade. We're going to stick with futures, and we're going to look at corn. And corn's been a tough trade for many people lately. I've stayed out of this for quite a while, but you've got a pretty solid downtrend going on in corn. As we head down into here, PSAR is bearish. You broke this, this uptrend here. Getting a little bit of a bounce today as you get around this 200 EMA, but solid on the down, but you're getting oversold on the weekly, and then the daily here. You've got this big gap. Maybe we pop up and fill this gap. I don't know, but all your MAs are stacked lower, but you're getting some reversal on the squeeze, potentially stochastic momentum. So you could see corn move higher, but you're heading into planting season. You've got weather concerns, lots of things happening with corn right now. So to me, the best way to play it, you could go with a strangle. I'm just going with a 1-1-2 trade. So we're going to put on a 40-60, 40-65 put debit spread, and we're going to finance with 2 395 puts. So we've got a lot of downside here. We're not even showing where corn is trading right now. As we just looked at the chart here, you've got corn trading about 573 on a pretty good update today, and we've got downside all the way to 395. So that's a pretty significant downside hedge. If we stay in the tail up here, you're going to make $113 on roughly a $1,300 buying power if we stay up here, which is 8% return on your margin in this 60-day trade. I'll probably take these naked puts off at 95% profit on these and leave the debit spread on. If you keep heading down into here, then maybe you'll make some gains. If you hit into the trap here, you make even more. So I'm all good. My goal is always 3% a month or more per trade. So this gives me the chance to make 8% in 60 days, which would be about 4% a month So solid. So that's what we're looking at for our 3 trades for the week this week. We'll put these on in the account. And if you want to follow along more, you can join up, check out what we're doing live, and see exactly what trades we finally end up with here and how we get filled. If you like this and you want to see more of this, please subscribe to the channel, like the video. Please feel free to drop comments and I'll be happy to respond. Have a fantastic rest of your day. Take care, everybody.